One of these ideas I've had, and I heard it first from Scott Galloway, is that COVID is not going to change anything. It's just going to accelerate what's already happening. And that got me thinking, has that always been the case? Like has every has every major correction or crash really not changed anything, but just accelerated what was already happening, but maybe we didn't see it. And so I want to explore that a little bit. Hey guys, this is RC Peck with Fearless Wealth. And let me jump over to a price chart that I think is getting more and more important, and that is the NASDAQ 100. This is the 100 largest companies in the NASDAQ composite. And those are companies that are also in the S&P 500, but there's a larger concentration, or there's a bigger weighting of them in the NASDAQ 100. And so here you have the Qs, and you couldn't really tell whether 2018 was worse or 2019. Like you couldn't tell this was a small correction and it just fell 20%. And this was a major collapse of the world economy. Like to me, first of all, very important how the NASDAQ 100, those 100 largest companies, a lot of them are tech. And this index is very heavily weighted in tech. And so what I see the most here is COVID has really accelerated what was already happening. Tech was already eating the world. And if I zoom back, let's just go back 10 years and just look at the NASDAQ 100. There was a little sidewaysness, right? There was a little sidewaysness in the NASDAQ 100 back here in 2015 and 2016. And didn't crash, it went sideways. But here you have this index. It's almost like the index of the future. And guys, I'm not saying this is going to be the index for the next 50 years, but man, has COVID really exposed how I guess the companies that are in here are so important. Here's the 2008 global financial crisis, which actually started in 2007. And what I find interesting is the NASDAQ 100, it only fell 54%. And I use only in quotes, but the S&P fell 58%. So if I rounded numbers, it fell 10% less, relatively speaking. Pretty darn impressive. But again, and I'm going to zoom back again, what the global financial crisis really exposed was how important those companies were, because these companies in here, the weighting of them in the NASDAQ 100 did not fall as hard as the S&P 500, and certainly as far as small caps. And as I zoom out, I bring in here the huge dot-com crash, which I think what happens is people have a memory of the NASDAQ 100 going back to the NASDAQ. And the NASDAQ fell 84%. Holy mother of Mary, 84%. That really is Great Depression, 1929-ish falls. The market fell 89% back then. But when I zoomed out and looked at this, I then realized, look at this. The NASDAQ 100, as measured by the Qs, could not get above this part, and there was a lot of resistance here. Well, if you go back to 2015 and 2016, this correction going sideways wasn't about the S&P. This was about the NASDAQ 100. This was about those 100 largest companies in the NASDAQ 100 that hit its old lifetime high back here in 2000 and had some digesting to do, right? As it broke above, you can see that here. As the price broke above to new lifetime highs, there was some digesting of this price. And once it got fully digested, which you can see here, it went up. And so I actually think this index, every correction we've had, right, and we're in one right now with COVID, and we had one in 2015, and we had the 2008 global financial crisis, and then we had the dot-com. Each one of these was an accelerant, right? It was exposing what was already happening. Now, the Qs have not been around, at least from an exchange traded fund, until 99. And so what I want to do is I just want to jump over to the actual index, NBX, which is the index of the 100 largest companies in the NASDAQ composite. And again, this is still just an absolute price chart, But what you see here is the 90s, which is amazing. I mean, this was an acceleration here. I mean, look at that acceleration. And obviously, way too much money went into technology. And there was just a crazy, crazy 84% crash here. But check this out. If we take this and we just divide this. Now, what I'm doing is I'm dividing the NASDAQ 100 by the S&P 500. Notice the NASDAQ 100 beat the S&P in the 90s. It crushed it at the end of the 90s and had a huge comeuppance here, right? It really, really, really crazily underperformed against the S&P. And I'm not discounting it like that will never happen again. But what I'm pointing out to you is the NASDAQ 100 actually has been outperforming pretty much its entire existence, except this 2.5 year, this 30-month period where things got really, really out of control. And then you have this period here where it went sideways against the S&P. My point is, and I want to zoom out even a little bit farther to where we have the beginning of the NASDAQ 100, where even when it was started, it went sideways with the S&P. And so what we have here is every major correction. Here's 1987 right in here. It held right alongside with the S&P. Okay, we had a recession here. It definitely broke down, but it didn't break down below its lows. And so the NASDAQ's actually been saying to us over time, hey, the way we weight these 100 companies are actually more important than the 500 companies in the S&P 500. And again, you can see that in this price chart. Now, here's something that's really interesting. We are getting to the point of the old lifetime high back in February of 2000, where the NASDAQ NDX divided by SPX peaked, right? We're getting really close, and we're above this correction here, which to me is another interesting thing. If you look here between 18 and 19, the NASDAQ, I'm looking right here, and I know you kind of have to squint, but notice how the NASDAQ kind of stopped relative to the S&P. It stopped accelerating higher. And lo and behold, if you go back to 2000, you have the same resistance. The point of me showing this to you is the NASDAQ 100, I'm just going to call it, I'll either call it the NASDAQ 100 or the Qs. They've actually been telling us over time, guys, we're more important. So what is going to happen here? We have the peak of this relative ratio. That might be redundant. So it's very likely, I personally believe we're going to have some sidewaysness, right? This may be where we get the sidewaysness in the stock market because of COVID. But this is it may just be a relative sideness. And look, if the NASDAQ 100 relative to the S&P 500 breaks above this, and I humbly believe it will, it is going to be just another acceleration of those 100 companies in the NASDAQ 100 when compared to the S&P 500. And it's going to be nothing new, right? This is going to be nothing new. It's just going to be something that's been happening since the NASDAQ 100 was formed back in 1985, right? So this is something that's been going on 45 years. That's a very long trend. And the longer a trend, the stronger the trend, right? This is something that is going to continue to happen and happen. And every time the market goes through a correction or a crash, however you want to call it, it's only making those 100 companies stronger. So guys, this is just another step in bringing you more control and clarity over your portfolio, over your finances, over your life. And if you like this, you're going to love my portfolio review where I, with you on a screen share, we look at your symbols and I point out to you which ones are helping you and which ones are hurting you. If you're curious about that, super easy to get to. Just go to fearlesswealth.com/Xray. Or you can just go to the top of comments where there's a link. So thanks guys for being in my world, and I will speak to you soon.